Hello and welcome to the Power of Passive Investing. We have a very interesting guest today, a friend of mine, Saul. Saul, welcome. Great to
Thank you,
have
thank you, thank you, thank you for having me here.
you. Of course. Excited to interview you. I already know about your amazing journey and I want our audience to hear more about it. So, why don't we start with you sharing a little bit about yourself and how you got to this point to where you're today?
Um, yeah, so I'm commercial real estate investor developer. Um, Currently focusing on buying small bay industrial properties and retail properties, mainly more than 50% focus is small bay industrial. And I am a partner in a Z Equity Group, and we buy mostly in Midwest. We have some assets in Florida, and I started this career a little over 20 years ago, buying houses, flipping houses, selling over 2,000 homes, and then doing apartments, and eventually selling housing and getting in and buying my first warehouse in 2017. And from that point on, pretty much 100% commercial real estate, and mostly was industrial big boxes. Then we were on the bandwagon buying self storages for a couple of years, for 3 years. Right now, we're selling everything we have remaining lots facility in self storage in Lehigh Acres, which we're going to be selling as well. And right now, we're focusing back in small bay industrial, because that's how typically I do it. Somehow, I'm able to see um, those movies that just start, and I'm typically getting out when moving is over. Um, Somehow, I'm able to pack my pack my toys and jump on an asset class.
Very nice, very nice. It sounds like you're doing business and having fun at the same time, which is always
100%, yeah. I love what I do. Yeah.
always awesome to hear. So Sal, tell us, please. Have you started your career in real estate, or did you do something else before real estate?
Oh, yeah, yeah. That's a great. So I'm originally from Lithuania, and which was Soviet Union back in the day till I was 10
Yep.
years old. And I came here 2001. I was studying economics. That's where I came here to University of Illinois at Chicago. Transferred my credits, and my dream, quote unquote, was at that time living in Lithuania, is to trade commodities or stocks. It was so invigorating to see how people are trading on the floor. Uh, at the same time, I came here 2001, right after 9/11, and that was a time when everything went online. So eventually, I went on the floor, but that was completely different feeling or energy. Whatever we saw back in '90s, no one was trading; it was silent. I remember my buddy Kirby Pearson brought me there, and it was like, wow, so silent, so completely different energy and feeling, and I ended up in real estate, also by luck, I would say. Um, I knew a friend, who had a mortgage company. He happened to be Lithuanian, and it was pretty much mortgage boom, refinancing boom. That's right before 2008 bubble, but I started like 2003, where I got my license,
Mhm.
appraising while I'm going to school. And I started doing appraisals, and started doing appraisals, starting understanding the values. Then eventually uh, stumble upon a course, or just like more information, or strategy how to buy properties at the sheriff auction. And I bought my first condo in Woodridge, Illinois for $86,000. And it was a condo, one bedroom condo, and I bought it, and I renovated lightly myself. I painted, changed the trim and carpets. It was minor renovation, probably less than $10,000, and I sold for $10,000 profit. And it was really a lot of money back then.
Yeah.
And yeah, that kind of prompted me to go to real estate, and I remember and it was a second semester, and I bought my um, new car, and I decided that, look, it probably doesn't make sense just to go this semester. I just took the semester off to make more money, and I never come
Oh,
back.
wow. Oh my God. Wow. So
Yeah.
you're literally a college dropout.
I literally college dropout. Yeah, I remember pretty much. I started questioning like reality, okay, how much the professor is making, and he is like 4 years ahead of me. And I started doing calculations. Okay, I'm from appraisal, I'm doing this, and I was working a lot. I was just like working a lot, so much, cracking reports, and then, just flipped my first property, and I realized I can make more money. And it just a realization, like, I think I'm making more money right now than this professor is teaching me. Let me take a half a semester off, and I'll make a little bit more money. I'll come back, But I don't know how many properties I bought in that 6 months, but it was just like, I'm gonna take another 6 months off, and I never come back to school.
Yeah, I love it. I love it. So, so you're definitely destined to be a multimillionaire. If you're a college dropout who realized early on that real estate was your path to success, then you're set. You're definitely going to be, if not already, a
Yeah,
multimillionaire.
thank you for saying that. I still have a chip on my shoulder, especially when I talk to my dad. He's old school, and he's like, maybe I should go back to school. Sometimes to look at those executive programs. Maybe I should get my diploma. So not rarely open up this way.
Yeah, no, I hear you. My mom is also old school, and they're just used to the fact that you need to get a degree and go to work and have that paycheck every 2 weeks. But
100%.
we live in a very different world where a lot of things are possible, and kudos to you for taking advantage of it and showing to your kids what can be done, what can be possible. I mean, many kids now decide not to go to college and just start making money off of social media, YouTube, and AI, and whatever else is available. But anyway, going back to our topic, you're definitely fit the typical like light bulb went off when you started doing flips. I heard the story from a few other folks that realized that real estate was something that can make them a lot wealthier than they were. And it's a lot easier to do it when you have nothing to lose. You came here
That's
to college,
exactly.
you're with empty pockets, and that's why you decided to take that chance and put your efforts in and see what happens. And I like how in your journey you were trying different things, flipping, buy and hold, multifamily. You mentioned storage and then large industrial. Tell us how you went from single families to commercial. Like,
Hmm.
what changed?
Yeah, and I do have a story, and I'll do a shorter version of that. So I have a good friend of mine, and he is a mentor of mine as well. His name is Arnold, and we got in real estate, I would say, close to the same time. But he was in logistics, and he was also started right away buying and holding industrial properties.
Mhm.
And I was still dabbling. I would say dabbling. I was, I had a company, I had an operation. I was in housing. Um, just to give you kind of, the the scale of that. When the market crashed, we were selling like 500 homes a month, so more than a home a day. So I had a team, and it felt like, we're one of the bigger operators in Chicagoland, and we were flipping homes. It was over 100 homes sometimes a year, and I did three markets: Chicago, Indianapolis, Miami once. And I met with Arnold for breakfast, and we started kind of, comparing the cash flow numbers, like napkin calculations on cash flow numbers, and it just like didn't make sense now how much more you can produce with commercial real estate. In terms of how small a team you need, and how much it's called quote unquote damage you can do in terms of value adding, value creation, and cash flow creation. And it was like, wow. And 2017, I remember three of us, we got together just like almost like a small mastermind. Three of us, three friends, and let's talk real estate, and let's look for properties. And I was always really good finding properties. Just somehow or another nag that I do have that knack find deals, and this is just one of the most exciting things to this day for me to get excited. It just unleashed me to find deals, and I find them all the time. And within an hour or so, I uncovered one deal, which was an MLS, and it was a bigger property than MLS would typically have. It was 76,000 square feet building in University Park, and it was foreclosed. It had like a sad story between dad and son, tragic story in terms of ownership, and it was foreclosed by the bank, and it was listed at $9 a foot. But that was 2017, mind you. At that time, the everyone in the world, in America, lived that now everything is going globalization route. We're not gonna manufacture anything. Everything's gonna be produced in India and in Mexico and stuff like that. And industrial properties was the same way. Like right now, it's offices. No one wants to touch them. No one wants to finance them. But it was $9 a foot, 76,000 square feet building. Now we're leasing this building at $9 a foot right now, and we bought it, I believe, for 900,000. We had to close cash, and when I found it, the friend who has experience in that is like, dude, I think it's a deal. And we went looked at it next day after Thanksgiving. Broker met us over there, and he walked in, and I have this. I don't know how to underwrite it yet in terms of income. I understand how to do it, but I just had a feeling it's a good deal. And he walked is like, it's a good deal. We bought it, we stabilized it, and we filled it in within 9 months, and we did refi within 12 months, which is pretty much pulled all equity out, including capex. We spent about 250, I think, on it, to renovating it, and we stabilized it, and it started cash flowing this property close to $200,000 a year, right? Pretty much within a year, right?
Amazing.
And I'm talking, we're pulling out all the equity out, and of course, debt at that time was very low, much lower than right now. And I just compared okay, how much I need to do in housing, and I had houses, so I think the number came out that one property was equal almost 86 homes in terms of cash flow. And I'm talking one building, which we put four tenants into it, and we had one part-time manager on it, and we put triple net leases. When we were responsible only for the snow, and that's about it. And when the roof leaks, you fix it within a week, just reasonably. You don't jump into Christmas, unplug the toilet, and it was like light bulb came out. Oh, doesn't make any sense in terms of how much effort it takes um, to stabilize one property and then cash flow. As long as you can stomach the call it risk, because when you buy big box, you're not gonna lease it in a week. You housing, you leasing right away, and you don't feel probably the pain of uncertainty or the risk. When you have a sitting vacant box, you just have to think a different time horizon, a year or two. But when it stabilizes, it stabilizes. So it's not really more risky if you can look at that risk within 2, 3, 4 years horizon. If you're looking at a month horizon, 100% of the box is much more risky than 20 houses. But that was it. And then COVID hit. I remember, and I was a part of Commercial Academy, and I remember Scott, who was leading that group. He was very adamant about that. Assets, probably will go down, and if we can, something is not stabilized, to sell it. So it was, and I think it was almost like uncertainty. It was June. In 2020, and I decided to put everything on the market. I literally put everything on the market in June, in terms of housing, apartments, and I cashed out by end of August, because the prices
Wow,
were going up.
that
And
fast.
and it took all that cash, then plowed it back in industrial properties. So it was good.
Amazing, amazing.
Yeah.
So even though you didn't get the degree in college yet, who knows? Maybe you'll take your dad's dream and put it into reality someday. I think you got the degree in economics from the streets for sure. Based on what you're saying and how you think, I can clearly see that you've got that in you. And one doesn't have to have a degree to have an analytical mind, and I understand the fundamentals. So I think you're good, and I'm happy to write you a certificate for business
Thank
degree,
you.
yeah, of economics in the street. Thank you for sharing
Thank
your
you.
thought process. I absolutely love how you think, and how you put everything into perspective. Risk versus reward. Take higher risk, be a little bit more patient, and you see a greater reward for pretty much the same effort. And it's like the law of gratification. I think it's taught in schools, and they talk about it when they talk about Maslow's law. When they give the kid one candy and they say, if you wait a minute, you can eat this one candy, but if you wait 50 minutes, you can have five. So same here. Wait a little bit longer, and 3 years. I mean, it flies in no time. You and I were just talking how fast the summer went. You can get so much more, and the reward is so much greater. And mind you, it's not always the case. It is still a risk,
Of
but
course.
calculated risk. If you understand the fundamentals, if you know where the demand is, you can make things work. And it also involves having multiple exit strategies. It's a vacant building. Okay, maybe we target medical tenants. Okay, if medical tenants don't work, then we'll switch and target office professionals. And I'm not talking about industrial, I'm talking in general terms.
Hmm.
It's a big box. But always have multiple strategies in mind. So if option A doesn't work, you go to the next one, go to option B, and just be agile and try to see what else can work for this big box that you bought. So makes perfect sense. Now, let's switch to the small bay industrial. How did you go from trying other things and then just
Hmm.
focusing on small bay?
Yeah, small bay industrial. I think there's a couple logical points over there. So first, uh, we were very actively buying big boxes 2019, 20, 21. And when we buy those vacant boxes, we would pick them up at $20, $30 a foot. We even bought two malls, one in Mansfield, Ohio, another one in Piqua, Ohio. And we're buying them at very, very inexpensive prices. And we did not have stomach like institutional capital to wait 2 3 years for leasing, so we did leasing in house. And based on our lease velocity, we saw that those units that are 3 4 5,000 square feet units with one garage door, small office, they just go like hotcakes. There is not enough of them in almost any major market. And it was just very, very huge demand, to this day. And then we were started buying small self storage facilities, which was also had a crazy increasing pricing. But with the self storage facilities, what happened is that once institutionals came in, the acquisition price rose so quickly. The first self storage facilities we were buying at $30 $40 a foot, and you really can't buy it anything like that anymore. Um, so and we also same thing. We learned lease self storage facilities in house through Google Ads, Facebook Ads, and pretty much create an entire like marketing machine. Not relying on broker community. First, broker community do not um, crave for those small bay industrial leasing because its commissions are small. So they're kind of not really taken care of, but the real demand is there. So we learned leasing really well. We learned leasing very well. And then I bought my first small bay, believe 2019, and same thing. I just leased it. So so I bought it vacant, and it was vacant like for 2 years. And it was attempted to lease through broker community, and it was a little dilapidated, so yeah, they couldn't find tenants. But when we took it, we did minimal repairs, just pretty much just spruced up the space. Nothing really in terms of major capex, just LED lights, polish floors, repaint, repave the parking lot, change garage doors, but not nothing really, really like major. Just make it really invite. Show a very presentable space for small businesses, and I leased that building actually within due diligence. So within due diligence, we leased that building 75% before it closed was 100% full. So we did refi like in the next 3 months, and the building. So we saw the leasing demand is there. We just we and I am marketer in my heart. I love marketing. I understand how to create leads, and leasing for us became very, very easy for small bay. For big bay, we still rely on the broker community that more like the relationship driven business. So we don't have this skill set, so to speak. So that being said, we realize that we have a leasing velocity in a small bay, and looking what's going on right now, I see that the self storage just got overheated, meaning that right now institutional buyers almost probably pulled some of them from buying that, and right now I see the same thing happening for small bay industrial. It is everyone on top, everyone on their top of minds, and institutional buyers coming in, and when institutional coming in. I know this is probably going to have another 24, 36 months when it's going to get oversaturated, and it's going to be time to get out. But right now, there is a time to get in because what happened is that there is so many properties nationwide that are still leased at, call it, 2017, 16, 18 rates, but we have a major lease increase jump during the COVID times. And some of the prices are not reflected yet, no, even in the even owners kind of realization. So the easiest game right now is just to buy those properties that did not have lease increases for quite some time. A lot of times they're still full, and you're just releasing them, and that's an opportunity. I think the one's gonna past 2 3 years when we're gonna get to the cycle of another lease renewals. We're not gonna have this gap anymore. So that's where I'm jumping in, and I've seen this. I've seen this, multiple times in my career.
Awesome. I love it. So, what would you suggest to someone who is starting out in real estate brand new, in terms of how to find where their passion is, what they enjoy doing the most in real estate? Like someone like you has tried many things and now found your favorite niche about what.
If I would have this knowledge right now, what I have, um, to 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 cut this journey a little bit shorter, I think I would find someone who is literally has 10,000 hours and has done it, and just try to go and bring the value. So, for example, I think the highest skill for any operator, I think buyer is in the highest chain, highest food chain. I think people think seller is the most like on hierarchy on the food chain, but I think the buyer is the highest on the food chain of the real estate. And if you're able to develop the skill, building the list and calling that list, and that's the easiest way to do it. That's the easiest
Yeah,
ways to get deals, whether brokers or direct to seller. But building the list and working the phones and meeting and getting those deals. Ideally, probably find someone who is in a market who has those 10,000 hours, whether in apartments or small bay industrial, and who is still looking for the deals, and you just go and bring them deals, and that's how we're gonna get in equity very, very quickly, probably
amazing.
within a year. You don't
Yeah,
have to
no,
do that for 20 years.
Great advice. Thank you, Saul. Thank you. I hope
Yeah.
our listeners are paying attention because your advice is absolutely gold. Um, One of the two personal questions that we always like to ask at the end: how can our audience find you? What are the best ways to connect with you?
Yeah, so my audience can find me. Easiest way is just to go on my newsletter. It is joinvaluebuilder.com. I write every single week. It is joinvaluebuilder.com.
Mhm.
You can register, and you can email me. I always reply to email. It's not AI, it's me. Um, And if you want to reach out to me via email, it's saul@zequitygroup.com. Saul@zequitygroup.com. I'm always looking for deals. If you have a deal that's too big for you to hear, but looks like a deal, I would like to jump on a call with you and see if we can take it down.
Awesome, awesome, very nice. And the last question we always ask is, how do you like to give back?
How look give gap? I think that's the best part of my life that I don't do enough. I think, but in terms of like actual what how do we give back? Once a year we go to Mexico and we build houses.
Oh,
It's in
nice.
Ensenada, Mexico. This year we're gonna go in April. So it's through organization called Hopes for Home. So I get together at least 5 real estate guys or gals. We need to have about 20 people, and we sponsor it. And we go there on Friday. We'll fly in San Diego. We get a charter bus, go through the border, go to Ensenada, build a house in Saturday and Sunday from sunrise to sunset, and we give that house away. And that's the most magical feeling you can give to yourself and to the people who receive it and the people who never done it. It's just such a magical time when we do that. So that's one thing we do.
That's absolutely amazing. So, so gracious of you to do it. I've never heard anyone do it, building a house in a weekend. That's absolutely
Yeah,
incredible.
and it's amazing. Yeah, that's amazing. We don't say it's us. We just say that I took it from Tony Robbins. That write a note. This is from someone who cares about you, and when we get up on your feet, please pass this along. And we just kind of passing that message. It's not us who are building it, even though we chipping in and building it. And it's amazing.
So beautiful. I hope you
Yeah.
do take pictures of the houses you guys built.
Oh yeah, I'll send it to you. Yeah, for sure.
Please do. I would love to see that. So, on that note, I want to thank you very much. I hope our audience reaches out to you. It's been an amazing interview, and we really, really appreciate you coming.
Thank you so much. Thank you, Lena. Okay, bye bye.
Here. Bye.
All right.